Lalit Khetan, CFO and ED of RK Forging is joining us now. There's a fundraise which has just happened at RK Forging. Mr. Khetan, afternoon. Thank you so much for your time. Talk to us about the proceeds of this fundraise, and by when will the utilization of the funds start showing in numbers?
Yeah, so the object of the issue was to substantially repay the debt. So debt will go down substantially, and it will be reflecting from the Q3 number itself, because it will happening in the next 1 or 2 days. It will start happening, reduction in debt, and you can very well see the impact in Q3.
How much savings from debt servicing cost will it start showing in Q3?
Yes. It will start because we are already, I think we will have at least 40 days savings in terms of interest cost.
How much of that would be in rupees crore, I meant?
Pardon? I could not get you.
In rupees crore terms, what will be the savings on interest cost, which will eventually start getting added in your profits?
So if you look at objective issue, we propose to pay around 600 crore of debt from the proceeds, and rest can be used in the general corporate purpose and incremental working capital requirement. So even if you look at 600 crore, it will be something around 48 crore per annum. And then we will look how further we need look at reducing the debt. And overall target is to have at least 70-75 crore per annum reduction in terms of annual savings.
Okay, Mr. Khetan, this is Vinny joining in the conversation as well. Just the point that I want to furthermore talk about is that you have indicated that you're targeting a net debt to EBITDA ratio of 1 time by FY25. If you look at the first half of FY24, the ratio is somewhere at 1.7 times. Does this target still hold on? And what is the trajectory going forward for the debt levels furthermore?
So this target will be now bettered. Right now, after this fundraise, we will be less than 1 in terms of debt to EBITDA.
Right. Also let's just talk some bit more about, overall the growth plans for the company as well. Anything specific in terms of that you have, the status that is coming in terms of the expansion plans, as well as any inorganic or organic growth opportunity you would be looking at?
No, so right now, whatever is there in public domain, we have already informed the streets, and right now we are not evaluating anything further on the inorganic side. And on the capacity addition, we keep on working on the capacity addition, and when we will decide on the further capex, we will certainly let you know. And right now, certainly there has been no decision on that. So, but time to time, we will keep on working on the growth. We will work on the inorganic opportunity, as well as on the capacity expansion on the existing business also. So it will continue.
Mr. Khetan, when you are analyzing your geographies you are operating in and India business, of course, where is the maximum growth coming from?
No, it is coming, I think, almost proportional, pro rata from the geography like North America or Europe and Asia Pacific, including India. So we are growing in each geography, maybe 100, 200 basis points here and there, but growth is coming from all the geography.
Right, Mr. Khetan. Obviously growth is coming from all the geographies as well as what you're highlighting. But lastly, just one thing I want to talk about is in terms of the overall, what is the status of the JMT Auto acquisition, and when can we expect this deal to actually be concluded by? And also, what's the progress on ACIL acquisition as well?
So JMT Auto deal is almost done. So we are implementing the plan, I think, in next very shortly. You will get the information in next 3-4 days time on that. And ACIL, still it is pending right now. Decision is pending in the Supreme Court. So we are still awaiting that order from the Supreme Court. Once it happens, I think it will happen in next 3-4 time once Supreme Court decides.
Thanks very much, Mr. Khetan, for that.